So if you're looking for a best non-nav erosion ETF to invest your money and receive monthly income, this is one of the best income ETFs. This is XQQI. Average since inception, as you can see, the first time they paid distributions was February 6, 2026. They paid in March, they paid in April, May, June. And the first time was 85 cents, 81 cents, 77 cents, 86 cents, 92 cents. If we calculate the yield for last distribution, this is about 20%. But the way I like to do is not going with just the last distributions because that will be cheating. What I did here, I combine all of these and I get average distributions is 84 cents. And we're going to do our math based off this number. So if you look at distributions overall since they paid was $4.21. If we include this with our share price of today, which is 52.84, that's 57.05 cents. So with that number, we're getting 84 cents average distribution. The yield on average is 19.8. So using this annual yield, how much you need to retire with this ETF? We're going to do two types of math here. The first thing we're going to do here, guys, is a lump sum where you're going to invest now and let your money pay your distributions as of now. And second, I'm going to show you a slide where you're going to invest, say, 50,000 or 60,000 and add some monthly income into your portfolio and accumulate and reinvest all the distributions or the dividends and see how long it's going to take you to be a millionaire. XQQI price is 53.17. And after hours, it went down a little bit, 52.84. But if we look at total return with DRIP since he came out, and that hasn't been a long time, right? And it has returned about 18%. I mean, reinvesting all your distributions that you have received, all compound annual growth rate of about 50%. And total return with no drip is 16.5, compound annual growth rate of 46.36. And if we just look at the share price without having to include all the distributions, that's about 7.9% return or 20.98 CAGR. That's pretty impressive. And if we just look at the share price without having to include all the distributions, that's 7.9 or 20.98 compound annual growth rate. Dividend increase is 8.5, 28.36 compound annual growth rate. And the projection of dividend, as I've said, from last distribution they paid is 20.81. So pretty good. And you can see here, he has been increasing from where it started. So if you invested $10,000 when this ETF came out, today your $10,000 would have been 11,760. That's for 18%. And with no drip, it's 11,646 or 16%. Very impressive. You might get confused between XQQI and QQI. As you can see here, they look pretty similar. The only difference is that this is a Nasdaq 100 high income and it does pay monthly. The yield right now is 14.11. And when it comes to this one here, XQQI is boosted Nasdaq 100 high income. So pretty similar. The only difference is that this is boosted. I mean, they're going to use some other strategy to boost the yield. And that's why you can see the yield here is almost double this one here. In the past, I made a video on QQQI income guidance, and I showed you how you can take $50,000 and retire with that, or with lump sum, or reinvest for 10 years. Today, I'm going to show you this one here, and maybe in the future, I'm going to make other videos on SPY and XSPI. So if you want to see more of these videos, just make sure you leave a comment below and let me know which ETFs you want me to make a video on. And for people who don't want to miss this type of guidance, make sure you subscribe to this channel. And if you like this content, as always, don't forget to smash the like button. So let's continue. I'm going to expand on this ETF, XQQI NEO boosted Nasdaq 100. The distribution frequency is monthly, as I've mentioned, and management fee is only 0.98, so less than 1%. And distribution rate is 20.11, but this changes as we have seen. If you do average, is around 19%, but pretty good. XQQI was incepted on February 2nd, 2026. Primary exchange is civil. Underlying stock, they have Nvidia, Apple, Micron Technology, Microsoft, Amazon, Advanced Micro Device, Alphabet, Tesla. And these are the percentage. You can see the majority of this ETF, as the name suggests, is the Nasdaq. So the top big dog from tech. As I've mentioned earlier, that there are two ways to invest in this ETF and retire. The first one is to have the income projection for now, meaning you're investing a lump sum and receive your distributions as of today. And the other method is to invest a little bit of money and maybe add a little bit monthly and retire in 10 to 15 years. I'm going to discuss the first method, which is a lump sum. So income projection for 2026. Now, if you put $10,000, you are getting not that much in annual income. It's only 1,908. As you can see, the more you add, the more you're going to get monthly and the more you're going to get annually. But the amount that I would say is more sufficient for a lot of people would be from like a quarter million, 250 with this ETF. You're going to get, with the price of today, that's 4,731 shares. And that will give you month income of over 3,000, closer to 4,000. And that will be 47,691 per year. But again, this is just the price of today. So let's say, for example, there's a market correction and you buy at the lower prices, you're going to get, with the same amount, you're going to get more shares. And of course, your yield is going to increase. And therefore, you're going to increase your annual income. But if you invested 300,000, then definitely you'll be able to retire. For a lot of people, that will be closer to 60,000. So that's a good amount of money. But if you want to make a lot, closer to 100,000 annual income, then you have to put like 500,000. And that's going to give you 9,463 shares or 7,949, closer to 8,000 per month, or 95,382 in annual income. So do you think you can retire with 95,000? I would say yes for a lot of people. But remember, you're going to pay some tax with this. It depends on your income level and also what type of account you're investing. You might pay 15% to 30%. For a lot of people, I would say it will be very little, maybe between 15 to 20%. So if you pay 15% with this, you still have a lot of money left over. So the other method is to invest a lump sum of 50,000 or 60,000. In this example, I put 60,000, and we are assuming there's no dividend growth. We have seen that this ETF has some growth in terms of their distribution payment, but I'm going to ignore that. I'm putting only 0. We are assuming there's no dividend growth. The amount you're going to get today, that's it. And we are contributing around 600 a month. Annual share price, we are assuming there is no growth in share price. So the price you're buying today is kind of locked. There's no increase, there's no decrease. Of course, if there's a decrease, that math will change. And if there's increase, the math will change. But to simplify in this math, we're just going to ignore everything. We're just assuming it's going to stay the same. And annual dividend yield, I use the number of average, which is 1908, and number of years. With that amount, I put 15 years, but you can always change. Of course, the more you add here, the number of years will decrease, or the more you start with as a capital, that will also decrease your number of years you're going to invest. So we start with the first year with $60,000. End of second year, you're going to have 82,000. Assuming you're investing all your distributions and you're putting $600 a month into your portfolio. Now, within 5 years, you still don't have as much. You don't even have 200,000. But let the money grow for another 5 years, then your income at that point will be 67,000. That's a pretty good income per year, but you're not using that. You just let it grow. And at that point, you don't even have 500,000. So if you let that money keep growing, you're going to wait till the 15th year. Then your portfolio at that point will be 1,029,337. And annual income at that point will be 137. And you have received 879,000, closer to 900,000 in distributions. That's very good. Guys, I just made this video to show you two ways to invest in QQI and retire. The first way is to invest lump sum and receive a distribution today and retire today. And second method is this way, where you're going to invest a $60,000 is your capital, and you're going to add $600 or $1,000 and keep reinvesting all your distributions for 10 to 15 years till your portfolio reaches 1 million to 2 million. So which way do you prefer? Let me know in the comment below. Thank you very much for watching, and don't forget to subscribe and hit the belly button for more updates. And also don't forget to smash the like button if you like this type of content. Also share with someone you think this video might help, so they can always generate passive income. Thank you. I'll catch you next one. Bye bye.